Guy, thank you for joining me on the podcast today.
It's all right.
We've got Guy today. Can you start by introducing yourself, please?
Yes, I'm Guy Prince. My company's First Oak Capital. We're a commercial finance broker, so we arrange business loans for UK companies up and down the country. So we arrange asset finance for vehicles, a lot of vans, commercial vehicles, machinery, and cash flow loans. So if people need money for the cash flow of their business, then we arrange government-backed loans, invoice finance. There's lots of different products, so I won't bore you with them all right now.
That's fine. We will get into it. The podcast is called Success Talks. What does success mean to you?
Success is I know it's just security for me, for my employees, for my family. It's building something. I like building something from scratch. I've started a few businesses, and I like the challenge of learning new things.
Okay.
Yes.
Would you consider yourself successful?
Reasonably. It depends who you compare yourself to. I think it's always dangerous to compare yourself to other people. But yeah, I've got a roof over my head. I enjoy what I'm doing. So yeah, I'd say I was successful from that respect.
Yeah, that's fine. That's cool. What got you into the world of business finance? You'll be able to create a bit of a backstory as to what led you to where you are now.
Well, I started arranging business loans for customers in the 90s when I was selling commercial vehicles. I used to work in main dealers. So I started with Peugeot. I used to sell lots of Peugeot vans, and that was where it began. I worked my way up and to managing a Honda garage. Ultimately, I then went to work for myself, selling commercial vehicles. And we met a lot of business owners, so we arranged finance for them and helped them to buy commercial vehicles.
Okay. And what made you make the transition from running garages to then effectively having your own businesses?
I suppose I just worked it out. I just worked out how they were making money and thought I can do this for myself. It would be nicer. And along the way, I dealt with various finance brokers that didn't always offer us a great service or offer my customers a great service. And so I decided to start a brokerage myself. Okay. I started in consumer credit initially, where we arranged finance for private individuals, but we also help businesses along the way.
Okay. And so when did you start your own business doing finance? So when did you step away from employment?
2005, I think it was. 2005, and then we started the brokerage in 2012.
What is your opinion on the finance industry? Would you consider it a tough industry?
It depends on whose perspective, I suppose. Well, from the business owner's point of view, or
from your point of view.
From my point of view,
in terms of your job, for you being in it.
There are a lot of people doing it, so. From our perspective, to find new customers can be hard. A lot of it's unregulated, so it's not regulated by the FCA, the Financial Conduct Authority. So anyone can start as a finance broker if they want to. But it doesn't necessarily mean that they know what they're doing or they're offering a good service.
Okay. So as a company, I know I can tell you right now that I get contacted all the time through cold emails, promising money. What would you say to a business owner that potentially is in a similar situation to myself, that gets a lot of outreach as far as we'll secure you this business finance or this commercial finance? What would be the difference between potentially going with a large brokerage that you don't know and then potentially going with somebody like yourself, more local, and are there differences between the two?
I think so. I think often the larger companies, you might end up being allocated sort of maybe someone quite junior who's not maybe experienced and just probably wants to sell you a basic term loan over a few years, when that might not be the best option, and it might be the most expensive option, but because it was the easiest way for them to arrange you a loan, then whereas with a smaller business, I mean, there's 4 of us, but we've got a lot of experience between us, and we've run businesses we'd like to think we know what we're doing, and we can recommend maybe the most suitable product, one that's going to be the lowest interest rate possible, because interest rates can be quite high on unsecured loans, for example.
Yeah, and especially at the moment, my not for asset finance, but my buy-to-let that I've just done is, there's no profit in the deal at all. So that's all fun. What would you say is one of the biggest challenges in terms of your business? What would you say is one of the biggest challenges you faced, and how did you overcome it?
Well, the biggest challenge starting any business is just getting up and running and getting a customer base. So that's all about marketing. It's like we were saying before, I suppose. It's tough. It's just, you just got to find customers. You've got to get the message out there, how you can help people. And we've done that. We've done that with social media, with our website, with SEO. So it's all about marketing. You got to wear many hats running a business, haven't you? And to begin with, marketing is an important one, isn't it? As I'm sure you know.
Very, very hard. What's a common misconception people have about securing business finance that you would like to debunk?
I think the most common one is just that it's difficult to arrange finance when you've not been going for too long. And that's not true. You can get help. A lot of the big banks don't want to help when you're new and you haven't got much of a track record, but if you've got the right CV and you've got the experience to run the business that you've started, and your credit history is reasonable, then you can get help.
Okay. So without having, say, 3 years of accounts, you could still get the loan, despite lots of people would have been told you need 3 years accounts before you can do anything.
Yes, you can.
Okay.
Yeah. I mean, even if you haven't got a year's accounts, if you've got management information, if you run a software like Xero or Sage, and you can print something off and you can show your bank statements, and as long as you can prove that you've got income to pay the payments, and there are companies out there that will. It's just knowing where to go.
Yeah, that's fine.
Which is
would you have a personal guarantee if you hadn't got too much accounts?
It depends. It's all about security for lenders. So if it depends on what if you just want a large, or it doesn't have to be large, but if you just want an unsecured loan, a term loan, and there's nothing to secure it on, then they'll often want a personal guarantee. But if you were buying a like electric car or a van or something, then they might just be happy with the security in the vehicle.
Okay,
so it varies.
And if someone's new to business loans and maybe doesn't quite understand the difference between having and not having a personal guarantee, are you able just to explain to somebody what that would mean before they go and agree to it somewhere and not quite understand what they're agreeing to?
Yes, well, if you have a limited company, and I know not everybody does, it's different, but if you have a limited company, then it's a separate legal entity, and if you sign up for a business loan or some asset finance, then the responsibility lies with the limited company, limited liability. Whereas a personal guarantee is where the lender will ask you as the company director to personally guarantee the repayment of that loan if your business fails and can't pay it back.
Yeah, and then they can come out after any of your personal assets and finances.
Yes, not directly. They just can't come along and take your house away or anything.
Yeah.
I think people do worry about personal guarantees.
Yeah.
And I suppose you do have to have confidence in your business. I mean, if you don't have confidence in it, why should you expect a lender to lend you money?
Yeah.
So
no, it's important. I think it's an important one to consider. I know my experience within my business of people trying to almost just get you to sign the document and not understand what you're signing for, but you're about to take, I don't know, whatever the finance might be on something quite large.
Yes.
And for some people, like I say, you should back your business 100%, but you've got to be aware of what you're signing off on.
Some lenders will ask you to go and get, to seek some legal advice before you sign it.
Yeah.
You can get insurance. You can pay for an insurance which covers the eventuality you might have that they might call on your personal guarantee.
Yeah.
Obviously, that's an extra cost.
Yeah.
But you can insure against your PG being called on.
Okay. If myself as a company wanted to secure finance with yourself, what would be the first steps you would take?
Well, it's our job to paint a really nice picture of you and your business to finance companies so that there's the biggest chance of you being approved and that you get the lowest interest rate. So we always just like to sit down and talk with our clients. And I say sit down, often it's a Zoom call or it's a telephone call because we're a long way from a lot of them. But yeah, we learn about their business, we learn about their experience, we learn about what's going well for them. If they've got a new contract, we just want to paint the best picture possible to a lender. So we take time to learn about them.
Okay.
We had a customer recently that referred to us as almost like a bank manager. A lot of people don't even remember what a bank manager
Yeah, I can't
was.
say I have too much experience with a bank manager.
Maybe you wouldn't. You're a bit younger than me. But I remember years ago, you had an account manager or a business manager, bank manager, and you had their mobile number. You could call them, and if you needed, and you built a relationship with them. That doesn't happen anymore. You phone a call center, you get put on hold, you get cut off, you get asked 10 security questions, you get transferred to someone else, you get asked the same 10 security questions. There's no relationship. They don't take any time to learn about you, and therefore it's all about what the computer decides is possible, isn't it?
Yeah, of course. So when you're getting to know the company that are looking for a loan, what are some key facts or indicators you'll be looking for?
Well, we'd ask them about their turnover, about their current liabilities, their their outgoing it's income and outgoing expenses, and we would ask, like I said before, about what they want to do with the money. What's the positive impact that money's going to make on their business, so we can really sell them to a lender.
Okay. If I try and paint an example of what I think might be a more tricky one, I may be wrong. If a company has £1 million in turnover, they're struggling with their cash flow at a certain period of time, and there's no asset, as in building, in the business, how would you go about that company getting a loan for their cash flow despite not having any spare money at the moment?
It depends on the reason for the cash flow problem. I suppose we'd need to understand: is it because it's taking a while for them to get paid? Mm-hmm. Is it because they've got to put a lot of money into stock? And from that, we can then try and work out what the best finance product might be. So, for example, if they're owed a lot of money, if they've invoiced a lot of customers and they're waiting to get paid, then those invoices could be the security that's required. Okay. So you can secure that. It's all about security. So what security can you offer? Whether it's that personal guarantee, whether it's their debtor book, whether it's the invoices for the money they're owed, we could maybe secure it on that. It might just be we might need to offer their customers finance. We've got a brand new product out at the moment where suppliers can put a little link on the bottom of their invoice, a bit like Klarna. Have you heard of Klarna? Yeah. So a bit like Klarna for B2B businesses, we can put a link on the bottom of their invoice, and that way they can get paid quicker, but their customer can borrow the money over 3 to 12 months.
Oh, I see. It's the same idea as Klarna, but an actual finance rather than just 3 months.
Yes. Okay. It could be 3 months. It could be 12 months. Yeah.
Okay.
So that's a good way of sometimes getting paid quicker and helping those cash flow. But there's lots of things, cash flow. There's all sorts of things you can do to improve that. Do you ask your suppliers for longer terms? Do you ask your customers to pay you quicker, or use that finance arrangement that I just mentioned? Do you need more customers? Do you need to put your prices up? I don't know. Maybe that's one for the business owner and their accountant, but. Okay, there's a whole raft of things you can look at to improve cash flow.
That's fine. If someone's been rejected on a loan before or recently, does that mean they won't be able to get any finance, or is there potential ways in which you may be able to help that business?
It depends on the reason. I mean, one of the reasons we mentioned earlier was if it's a new business. So a lot of new businesses do get despondent. We had a courier company last week actually. He'd He was very despondent. I think he just spent half a day on the side of the motorway in the rain with his old van, and he was a bit desperate for a new one. The previous day he'd been to the main dealer and asked for, he'd wanted to order a couple of new vans from them, but the computer said no. He'd not been in business long enough, and he was almost on the verge of giving up. I think he was quite upset, but he came to us. He was recommended to us by another company that we'd helped in the past, and we helped him. We know the finance companies that will help him.
Yeah.
And we helped paint that picture that I mentioned earlier of his experience and the contracts he had. So we were pleased, and he was pleased. He got 2 new vans. So.
Okay, nice. If you've applied for some form of finance, like you say vehicle finance, for a main dealer, and you get declined, how much of a role would that play on your business credit score or the way that the next potential lender will view you? And the reason why I ask is because I went in for an electric car. It was 6 months ago. It was only £200 a month with the business. And I won't tell you the numbers of the business, but should not have been an issue at all. And we got declined at the first hurdle. No idea why. Never found out why.
Didn't explain why. No.
But like, for example, would that then view us negatively to the next lender, or does it not play too much of a part?
It's a credit search.
Okay.
They would have probably carried out a credit search on you as the director. So as long as you don't have lots of it shouldn't make any difference. There was some reason that they decided they didn't want to do it. It might just be because you had a new business, or some companies are just very, very fussy. Mm-hmm. They only want to lend to the top percentage. They don't like any risk. But without asking them, I don't know.
Okay, that's fine.
But there's lots of other companies to speak to.
That's fine. If a company sat there thinking about getting in contact with yourself or trying to get finance, is there any particular red flags that they could have within their business or their credit score which would negatively impact you being able to secure finance for them? Like any obvious red flags?
Obvious ones are things like county court judgments, late payments, those kind of things. They will look at your bank statements. Mm-hmm. That's the most recent history they can judge you on. Accounts from a year ago doesn't tell them what they necessarily need to know. Mm-hmm. Sometimes people don't realise they enter into maybe like an arrangement with HMRC if they struggle to pay their VAT bill or their corporation tax bill. If you enter into an arrangement with HMRC, people don't always realise that it will show on your bank statements your repayments.
Okay.
So it's not going to show up on your credit file. It's not a black mark in that respect, but the lender will notice on your bank statement the repayments, and they don't like that.
Okay.
So
even if you're making the payment every single time,
even if you're making it,
just for the fact you're technically behind.
It's the fact that you got yourself into that sort of predicament in the first place and didn't manage. I suppose they view it you didn't manage your money quite well enough. Unfair as it might sound, they don't particularly like it.
What options would somebody have if their business currently isn't profiting? I think it would be easy to assume they can't get any finance. If their business isn't profiting, are there options and ways you can still help them?
Yes, it doesn't. It's not all about profit for some business. If you've got turnover and you can show that you can afford the payment, I suppose you do need some level of profit generally, but payments before profit, payments before tax rather. There are ways, or maybe helping the cash flow that we talked about earlier. That helps businesses a lot.
Okay, that's fine. If we were to look at asset finance, government-backed loans, and invoice finance, what would you say is the preferred choice of finance to a company, or maybe the better interest rate that a company could secure?
It's all about that security that I mentioned earlier. The more security you can offer, then the better the deal is going to be. So asset finance is going to get the best rate because there's a vehicle that it's secured on, or a piece of machinery. Then there's security for the lender. If you were to stop paying, then they can take that back and sell it and get their money back more easily. It's a higher risk for like a term loan, unsecured finance. So you will pay a higher rate for those. Yeah.
You mentioned it earlier, and I know it's something that until recently I never knew even existed. Are you able to explain in the simplest term possible what invoice finance is?
So yes, invoice finance, like we touched on earlier, it's an advance on your unpaid debtor book. It's the money that's owed to you. You've invoiced a business. You might be giving them 90 days credit if you have to, or 60 days, 30 days. So you can take that invoice and present it to a finance company that you have an arrangement with, and they will advance you 80, 90% of that money.
Okay.
You will pay a fee on it. You know, it will be interest charges, but it gives you that money back into your business so that you can pay your staff or invest it in something else.
From a business perspective, my concern if I was to do that is, would the business not be at risk of running into the same issue over and over again? If it's, like, say, a 60-day term, the next batch of customers are on a 60-day term.
Yes.
Could that not spiral and become a continuous thing?
Often, it's a cost that you don't really want to be paying forever, isn't it? So it's sometimes a short-term measure, perhaps, to just get you out of a spot for a few months while you invest that money in something else.
Okay.
Or get your customer to pay the interest and use that like a flex. We call it flexi terms, but we put a link on the bottom of your invoice. Instead of giving your customer 90 days, why not give them 14 days and say, well, if you want a longer term, then you pay the fee, and here's a finance company that will lend it to you.
Okay. So with, let me think, because now you're making me click in my personal business. So so with the finance option for the debt that's due from your customer, if that's something as a company you offered and the customer took the payment plan,
Yes.
do the business get the money up front then once the payment plan's been taken?
Yes. So the business gets paid up front.
Yeah.
And then it's now down to the lender. So unlike invoice finance, where you're still responsible for it.
Yeah.
So not only are you paying for the invoice finance to get paid quicker, if your customer doesn't pay, then that's going to be your problem. The invoice finance company will come back and say we want our money back, and the bad debt is your problem.
Yeah.
With the other option I've just explained, yes, you get paid up front. The finance company is effectively lending the money to your customer, and if they don't repay it, then it's not your problem. So, which is another benefit of it.
Okay. Is there any, if a company wanted to use that option with their customers, is there any kind of framework the company needs to fit to be able to use that process? Like, do they have to have a certain amount of customers or a certain amount of money, or?
You need to be a limited company offering finance to other limited companies, and there is a minimum of £2,000 per invoice.
Okay,
but
so much larger payments.
But apart from that, no, it's not down to your credit history. It's more to do with the credit history of your customers. So you're not vetted in any way.
That's fine. So is it only from company to company? It can't be from company to person?
That's right.
Okay, gotcha. We spoke about limitations or red flags. Is there any specifics that really help somebody's finance application? Help them to secure money and make the process a lot easier?
Well, yeah, the obvious. I suppose it's about having some forethought. It's just keeping your books tidy. It's maybe having that Xero software or Sage or something, keeping your books straight on a regular basis, so that when you need to produce the information for a finance company, you've got it to hand. And it's about selling yourself to a lender, and that's where we help. Obviously, like I said earlier, we like to paint the best picture possible. So, what's this money going to do for your business? How's it going to improve your turnover? How's it going to improve your bottom line?
Yeah,
I'd say.
You touched on the man needing vans, and you helping secure some vans. Have you got any other examples of clients in which maybe before meeting yourself and discussing their finance, they were very low on the idea of getting finance, didn't think it was possible, and then you've kind of managed to secure them finance and it's impacted them in a positive way?
We've helped several car dealers recently, just with large large loans, 2, 3, 400,000 pound loans, where they didn't think it was possible. They've used traditional stocking loans in the past, which are quite tiring. You have to, every time you buy a car, you've got to put it onto a system, and you pay another fee, and and then you can only have the money for a couple of months, and then you've got to pay it back. So we just arranged a large stocking loan for them of a couple of £100,000, which they were surprised that we could do that. It meant they could go and buy lots of extra stock. It needn't be a car dealer; it could be any type of business. But yes, I mean, you could go and borrow £100,000, probably for not much more than £2,000 a month over 6 years, something like that. And you could do quite a lot with £100,000 if you've got if you plan things right.
A piece of financial advice you would give, so give company owners, for I suppose for me as a company owner, what advice would you give me to maybe implement in my business, or to make sure I've covered before applying for finance to set me up in a good position?
I think I'd come back to that accounting software again. Mm-hmm. I think there's too many businesses that we talk to, they're just not prepared. And when you ask them for information, they haven't got it. They've got to go and speak to their bookkeeper, and they've got a pile of receipts somewhere. So accountancy software is great. It helps you keep on top of your cash flow, your bank balance, and it means you're prepared.
Yeah, just the more evidence and the more trace.
Yes.
Is there any particular industry that you see that has a stronger ability to secure finance that helps them scale? Is there particular industries that it's easier for them to secure finance?
Industries that buy or need like asset finance generally. Asset finance, like I said earlier, is that security that lenders like. So asset-heavy businesses, transport businesses, manufacturing businesses, it's kind of easier for them in a way because the security is easier. Whereas if you're a service business and you're not actually going to secure that finance on something, it's not impossible, but it's slightly more difficult.
Much harder.
We can help. We can still help.
Okay. If you had to predict the future of business finance in the next 5 years, what do you see changing?
It's a tough one. Not sure what the answer to that one is, Jack.
Okay. Did you see it changing much? Or do you think it's going to continue very much on the same lines?
The thing that might change is perhaps more regulation. The FCA has hinted at regulating the commercial finance market more, whereas they haven't at the moment. It's not regulated. If you're a private individual, you get a lot of protection, whereas the businesses, you don't. So I think the FCA want to see companies treated more fairly, especially smaller businesses. So okay. I think that might happen.
Okay. So what difference does that make to? That makes a difference to us as the company, or as you?
Yeah, it just means that you. I mean, not all finance brokers are regulated by the FCA. We are. We're registered with the FCA, so we adhere to their guidelines and their policies of looking after our customers, giving them the best advice, treating them fairly, being transparent about what commission we might earn by introducing them to lenders. A lot of brokers don't do that, but we do. I think that will become maybe mandatory perhaps in the near future.
Okay.
So you can just, as a business owner, you can be more assured that you're getting the best advice and being looked after.
Yeah. So would that be why, this is again a personal question, the most recent car I got, after I got the car, I got sent a document saying I had to sign a document saying that I'm aware that it's on finance, it's on a lease, that the lease company got £2,000 in commission or whatever. Is that what you're linking it to?
Yes.
Okay. Yeah. A very strange experience to me. I was like, I don't care that you got £2,000 in commission. I didn't pay it.
Well, it's as far as consumer credit goes, it's been in the news an awful lot. I don't know if you follow that Martin Lewis, money saving expert. He's been making a big song and dance about it, and it's going through the courts at the moment, all about commission disclosure. So, were you told before you signed how much the lease company or the finance broker was making? Because it could have possibly changed your mind, but the ambulance chasing solicitors are hoping this is going to be the latest PPI claim. Do you remember when everyone? Yeah. So it could be quite big. I think it could cost, and I think the share price yesterday of, I think it was Close Brothers and Barclays went down like 7%, 10%, because the government were trying to intervene, and it could affect the whole industry. If people can't borrow money for cars, then how do cars get sold?
Yeah,
I think it's like 80% of cars get financed.
Yeah.
But now we're being told all the finance companies are being more transparent. It's not essential in commercial finance. We don't have to, but we are anyway.
Okay. Would there be, I'm just thinking out loud, would there be, when you've got multiple finance options to provide a business, do you always get the same commission no matter who you pick, or do different lenders offer different commissions?
Different lenders offer different commissions, yeah. It varies depending on the lender and the product.
Okay. So in theory, you as the broker could pick something purely more because it has a higher commission.
That's the danger of it. That's why the regulator.
And that's why they want to regulate.
That's why they want to regulate it.
Yeah. Okay, that's fine. Do you think the customer on the other side, if that happens, and we get told everything about all your commissions, do you think that would negatively impact your business if the customer knows the commission? Do you think it will change like our decision making on who we pick and things like that?
I don't know. It could do. Yeah, we're very upfront. We tell when people apply to us, we say, look, we could choose to charge a fee for our services. Mm-hmm. And I've often considered it. Should we actually charge? We offer a professional service. Should we charge people a fee for our services?
Yeah.
We choose not to. We only get paid if we help you find something that you're happy with.
Yeah.
Like you said, you were happy with the payment.
Yeah.
You didn't really care that they were earning £2,000.
You've agreed to the price monthly, haven't you? So whatever you get on the back end.
Yes. But we tell them we don't always know up front because we don't know which finance company or which product it might be. But we make people aware when they come to us, and then before they sign on the dotted line, we make them aware of exactly what we're making from it.
Okay, that's fine. How many? So also just to make it clear, so in essence, if a business comes to you, you secure them a loan, they don't pay you directly, you get your payment from the lender.
Yes.
How common is that in the industry? Is there a mixture of people that charge on the front end as well, or is most people getting paid just in commission?
It's a mixture. Yeah. Mm-hmm. Some charge just some will just charge you a flat fee for arranging the finance. Some will do a mixture. Some will charge a smaller fee and then get some money from the lender for finding them a customer. Mm-hmm. And some do what we do, where we don't charge up front currently, and we just get our money from the lender.
Okay, that's fine. I've bypassed government-backed loans.
Okay, yes.
Can you explain what a government-backed loan is?
Yes, so government-backed loans, there's always been support of some description in varying forms over the years. But if you remember when we had COVID, we had bounce back loans initially. Mm-hmm. I think you could get £50,000 to get you through the COVID situation, and then it became C-bills loans, which you could get slightly larger loans. You didn't necessarily have to make a payment for a year, and the government backed it. The latest, then there was the recovery loan scheme. But the latest government-backed loans basically give extra security to the lender. So they changed exactly what they do has changed over the years. But yeah, currently the government-backed loan means if the finance company needs the extra security, like we were talking about earlier, then they can go to the government to back up to 70% of the loan.
Okay, and what's the benefit right now of having a government-backed loan, and how does that help a business?
It just helps them get approved in the first place. If there's if they're at all borderline as to whether they're going to get approved, then the lender can rely on the government for extra security.
Okay.
In order
and is there
to support
specific
them.
things that they're looking to have government-backed loans within, what would that look to support?
It can support anything. It could support asset finance if required. It could support a term loan. We've seen it used for a lot of big term loans recently.
Okay.
It can be It can be any of those.
Is there a when I type in government-backed loan and get all the information up the other day, it chucks out $250,000 as a possibility. Like, is there any framework that the government-backed loan offers, like up to a certain amount of money, or?
It depends on the lender. They can they can use it for up to 500,000, I think.
Okay, that's fine.
Yeah. You don't actually apply for a government-backed loan. You apply for a loan, and if the best terms available are using that as extra security, then they'll use that.
Okay. For any new company owners out there that may need money to get off the ground or to help scale in the early stages, is there any key ways in which you can help or things they can do to secure finance?
It's always tough for a new business because big banks, high street banks don't like help. I remember when I started a business, no one wanted to help me. Mm-hmm. But yes, there are. If you've got a reasonable credit history and you've got a good business plan and you've got a good CV, we always like to try and help people with their CV. If you've got a CV, you can show that you've got the experience to run that new business and you've worked in that industry previously, or you've got a business partner that has, then everything's possible. Vehicles, all invoice finance, those products are all available.
That's fine. Anyone that's listening that is a company owner, maybe open to the idea of finance, before we finish, there's anything you would like to say to them in terms of information or for yourself?
Well, we're always open to to a conversation. As I say, we don't charge anything for our sort of advice, which it often is. So people can come to us. They can find our website. We're firstoakcapital.co.uk. If they Google us, they'll find all our content online, and or they can find me on LinkedIn. And we're happy to have a chat with them and see how we can help.
That's great, and we'll put all the links in the description as well.
Thank you
very much for being on the podcast.
No, pleasure.
Pleasure.
Thanks,
Pleasure having you.